We've got US claims data's all out in about, I'm going to send, let's put that over there so I can see my screen. There we are. Data's all out in about 10 minutes time. We've got the US weekly claims. Could we go back under 700,000? Consensus is around 704,000, 700,000 today. Remember last week it missed expectations again at 744,000. Probably more significance, though, is the retail sales number. Retail sales expected to have a big jump up to 5.3%. So see what that number looks like. Lots of analysts this morning talking about a big breakthrough for the herd immunity and a big pent-up demand. So it should have a bit of a potential big breakthrough. So a few minutes to live analysis. I don't know if anybody's here actually, because apparently I'm not due to start till 10 past. So, but never mind. I'll keep talking anyway. So that's the key thing. We'll just repeat all this if anybody is here. And then we've got the Philly Fed. Philly Fed notoriously quite volatile, but key index of manufacturing in the Philadelphia area. And that's again expected to run to about 4, I think, from 51. So let me just get my data up properly. So let me get my calendar up for when it opens up. So for the data. So yeah, Philly Fed 42 down from 51 last time. So we'll see how that comes. Strong claims, unemployment and employment data from Australia this month really bid the Kiwi and the Aussie bounced quite significantly this morning on that. Kiwi, surprisingly, was the best of the pair, but actually, look, how are we doing that? There we go. It was the best of the pair. So see what happens. For the data in, say, 7 or so minutes. So let's quick run through the charts. Anyway, this is the dollar index. We've been down under S1 today. This is a 17-day low here under S1. We went under 91.50. 92 was a key support area, as you can see here on the chart. Actually, no, I'm just putting that in the wrong chart. So key support area was this big psychological 92 area, and let me just get that up. There we are. 92, the big thick yellow line here. So we had 1, 2, 3 supports, and then we breached it, and then it's just tanked down here from yesterday, from Tuesday through down again on Wednesday, and down again this morning today, testing under 91.50. That's the next big support line here. It's also S1 today, so 91.50, a key low for the dollar index. If we look at this on the daily time frame, you can see that we've been tracking lower from the close of March as we rallied up. We were giving up most of March's gains so far and testing this key 91 area here. So this is on the daily time frame. So we've got these 2 candles breaching it here, 2 candles breaching it here, and here we are into test it again now. So where we go from here, we shall see. Many were expecting the dollar to be weak for 2021. Obviously, it started off the year down here, even weaker. We're expecting more of this to happen, but we didn't. We recovered in January and February, rocketing March. So a very strong first quarter for the dollar index, and then we've turned around as we start the second quarter, and we're down so far every single trading day bar 2. See those 3 white candles there? So every day down. In April, though, so far, except 3 days, and those 3 white candles are much smaller than the big red candles that were going down. So we broke the 20-day moving, or the 200-day moving average here just at the beginning of the month. We started to go down, and then the key thing here, I don't know if you can see, yeah, you can see it just by my head there. You can see that the MACD histogram line is plotting. I mean, it's only yesterday just broke under, but today's, with that test of that 91.50, broke and under the 0 line here, and it's a histogram signal line moving down, gap between the signal line and the top of the histogram. So bearish movement in line, and that we're moving lower for dollar index. So dollar remains very much under pressure. Euro As we can see, hope we can see that. And just at the top of the chart now, this is the 1 hour chart, remember, at the top of the chart, we can now see, I'll start to see 120 in sight. 120 now sits just above today's R1, and R2 sits up there at 120.10. So 120 definitely in the radar of euro dollar bulls. We've rallied today. We went to we tested R1, we went to 119.95, 5 pips shy of 120. And then we've moved down ahead of the data. That's the purple line there is the big 50-hour moving average. 20-hour is up there. We broke that already today, and we were outside the Bollinger Band earlier, but that 50-hour has come down to be tested. Didn't get as low as S1 for the euro. So there we go. I think I am talking to myself here at the moment, so I've started too early. But anyway, we'll see. I say key data. Let me just double check my data for later on today. So retail sales 6.3%. That's what I've got down here. Retail sales 6.3 is expected. Big blow up potentially. 6.3 is expected. I had 5.3. That's been upgraded from earlier in the week. The headline and 5% for the core. It claims 700,000. We said that, didn't we? And Philly Fed 42. So let me just make sure I've got that right down. Philly Fed 42. I think it was on 40 earlier in the week, so 51.8 last time. 63. So key data today. And then, guys, don't forget overnight, those of you that trade in the European session or the Asian session, beware, we've got key Chinese data overnight as well. We've got the first quarter GDP, again, a big blowout expectation for Chinese GDP for Q1. Expect to come in at 18%, up from a very, very healthy 6.5%, but 18% would be a big blowout. Chinese data's been very strong. It's moving ahead. It's moving ahead quite strongly. Now, the sentiment is turning to the control of the credit in China, and expectations that the strong recovery for China will ripple out to its neighbours, obviously impacting places like Australia, New Zealand, and Japan to a lesser extent, but certainly strength expected for the Chinese economy for the rest of the year. But where we really go from here, there's a big recovery this Q1 is to be seen, really. Obviously, earnings are key. Again, yesterday we had the first of the big banks reporting. I'm sure you've all seen that. JP Morgan, Wells Fargo, and Goldman Sachs all beating expectations. Some of the JP Morgan share actually went down on close. Markets were already pricing in a big beat, but it was a huge beat. Very, very strong numbers. Bank of America this morning have already beat numbers. There's lots of other banks reporting today as well. PepsiCo, BlackRock, big fund manager, Delta Airlines, the aluminium smelter, Alcoa also providing their first quarter data today, as well as Citibank as well. So lots going on at the moment. Dollar yen continues to unwind. Weakness of the dollar exacerbated here, 108.80 at the moment. Let's have a quick run through. Cable had a go at 138 earlier, and it's reversed quite aggressively. You see it's really bouncing around yesterday and today between the 200-hour moving average down here at 137.68 and the top at 138. So an oscillator's dream there. Sell up there, we're buying down here, selling up there, buying down here, selling, buying, selling, buying, and there we go. So wait for that to break. But as you can see here, even on this 1 hour chart, you can see that's been edging higher all week, really. And let me just make that a colour so we can see it later on the black chart. Let's make it a bit brighter than that. Let's make it aqua. You can see that. I'll make it a bit thicker. Make it solid. Make it a big fat one. There we are. That's our uptrend. From this floor here on Monday, Tuesday, Wednesday up, Thursday. Monday, Tuesday, Wednesday, Thursday up, and we've got this wedge forming here. This flat-topped triangle at 139. So are we going to break up there? We shall see. Where are we? Right. So you should be joining me now. We officially go live now. So welcome everyone. Hope you're well. Hope you can hear me. It's Stuart here, another live analysis. We've just had a big data dump from the United States today. We've got weekly claims expected around 700,000. We've got retail sales, and we've also got the Philly Fed also coming out at the moment. So retail sales being a big beat, a significant beat here. So the headline has come in at 9.8%, the month-on-month for March, 9.8%. The group control one, the more sort of targeted, that's at 6.9% compared to 6.3%. Much better than obviously last time, but they were both negative, minus 3.4%. And the excluding the autos has come in at 8.4%. So it is a very strong retail number compared to what was expected. 5% was expected for the core, the ex-autos number. That's a big number, and minus 2.7% last time, 8.4% this time. Big positive number. Other positive number is the finally we've breached the 700,000 level for new claims, new weekly claims out in the United States. In fact, it's breached 700,000. It's gone all the way down to 576,000. That's the lowest weekly new claims since the pandemic began. So that's quite a key number. Also, the continuing weekly average has also broken the key psychological 700,000. It's down at 683,000. So that's a two key numbers. So positive retail sales, positive signs on the job front following through from the miss last week. And again, last week was actually upgraded yet again to 769,000. So it's not all good news. And the continuing 4-week average has also been upgraded to 700,000 from 723,000. So I say it's not all great news. So last week we were seeing there was a bit of a kink because of the Easter and the spring break holidays catching it out. So, but that's quite a significant beat. It's 576k compared to 700k. So 114,000 better or less unemployed people, or less people expected to claim unemployment than had been anticipated, and a big drop from the 744,000 from last week, which is now 769,000 on the second retrip. So Dolomite weaken on that, and indeed yen's down here at 108.76, and euro has peaked to 119.78. So as I said before, 50-hour moving average working quite well. So good afternoon, everyone. Let's have a look who's in. And nobody's in. Now then, have we not started? There's nobody here. There's nobody here on YouTube. Let me just check out my Facebook friends. See where we are. So big positive data for the US economy. Not necessarily for the dollar. Dollar's immediately gone the other way at the moment, but don't get too stressed about that. But that's a positive number. Somebody's spamming. This always happens, doesn't it? First two comments are all spam today. Never mind. Such is life, I suppose. So any things you want to have a look at, guys, please let me know, and we shall endeavour to have a look at them for you. So let's just go through the data again very quickly. Weekly claims better than expected at 576,000, expected to be 700,000, so it's 114,000 better than expected. Key data today has been the US retail sales headline is coming at 9.8%, just shy of 10% growth. It was expected to come in about 5 and a bit percent, 5.9%, so it's a big positive number. The core number is also better than expected at 8.4% compared to 5% expectations and minus 2.7% last time. So it's a big bounce back for retail sales figures. Remember, the retail, the consumer is king in these developed economies, especially the United States. As we approach herd immunity in places like the UK and the US, there could be this massive unleashing of what is expected to be pent-up demand. But remember, markets tend to get ahead of themselves. They tend to go up too high and down too low. So see if we are overreacting. But certainly this is positive data from the United States. Brian, good afternoon to you, sir. I can't put your question up can't share it here on the live stream, but good afternoon to you. Hope Durban isn't too hot and clammy today. April it tends to be a bit sticky, doesn't it, in April down in Durban, so hope you're keeping cool. So there we go. Euro 119.76. Kiwi's been our best performer today. Kiwi back up here at 171. 71.71. Bashed into R1 a few times today. It's come down again, but that should have given it a lift with this data. The dollar continuing to weaken, and again, that's one that's broken out on Tuesday, rallied Wednesday following the RBNZ, and rallied again today into R1 here at 171. So it's over 170. Sorry, it's over 70, which is what we tested on briefly on Tuesday through 170. Through 71, sorry, and at 71.70 on the upside. So our best performer today is the Kiwi. Why so few people in here today? Something's going on, I would guess, but never mind. We'll sort it out, no doubt. That's the Kiwi. Aussie also holding up over 77 now, 77.50 zone. R1 for the Kiwi, so the Aussie today is 77.64. So another one that's bid. Again, another, consolidating for Monday, end of Friday, under the 200-hour moving average, not going on. So we're bouncing off the key 76 level, 76, up, down, up, down, up, down, and the break there. So you would have gone long here on this crossing strategy on the Aussie here on Tuesday. Not that one, the one before, the hour before. I can't move that now. No, it won't move. Here, as we've broken the 200, and then that's just tracked higher. We haven't broken or under the 9 period until here. That was out. Looked like we were going to go short, didn't happen. And we're still with the trend, and we've broken up again, 77.50. So Aussie remains long. So any requests, guys? There's not a lot of you in here. Let me see if I can refresh that. I don't know what's happened today. Moosey's asking about gold and silver. Well, gold, moving quite high. Silver's probably following it. Let's have a look at gold. Gold was fairly strong. This is gold on the 1 hour time. Let's just take that to the daily time frame. So where were we? Let's just do a quick recap on gold. Gold, we did. This is the key level we were looking at. This 1745 on the end of day base. I think when we did this, was it this time last week? I think it might have been this. So we had a strong close this time last week on the 8th, and over that 1745. We then rallied to 1758 that day, but then we turned around. So we didn't break and hold the break of 1745, Muzzy, on the daily time. Oh, you're saying 4 hour? Okay, let's have a look. 4 hour. But anyway, let me just finish the higher time frame. This daily. So the daily still remains relatively well big, because that's the 200. That's the 20 days. See what the 20 day is S1 there at 1730. So if we zoom this out a wee bit, and then we move into the 4 hour. Let's zoom that. You can see how we rallied to this 1758 and then came down through the 50 day, through the 200 day, 200 period, the 50 period. Then we had this big, strong bounce here midday during the 13th. And we just now, obviously, the psychological 1750 is proving an issue. So 4 hour trades, we really want to close back over this 1750 to take another stab at 1758, this daily high, but the 4 hour remains strong. If we just go back to the daily, you can see how let me zoom that up. There, you can see how the 20-day moving average broke here on the 1st of April, and we've been over it for all of April. So it's coinciding with this weakness in the dollar, obviously. And as the yields have cooled, gold's got a bit of a bid. Remember, we've been dominated by the yield curve and the yield expectation. That focus sort of shifted this week to the observations on the inflation data. Remember, inflation was better than expected again on day before yesterday out of the US. So this spike in inflation is expected. The Fed keeps saying it's only going to be transitory. Don't worry. Well, they're quite benign about it. They're quite relaxed about it. And so they're trying to feed that through the markets. And that's really what gold is saying as well. So the 20-day is the key level there. That support at 2030, where the 20-day moving average is. So here we'd need to break back to the 50 day moving average here on the daily time frame, Muzzy, to break that 50-day moving average. So your 4-hour trades, that 50 is up here somewhere, isn't it? Above, just above or just below R1 today, round about here, isn't it? Yeah. So that's 4 hours main bid. If it closes above that break, that big candle there at 1747, that remains positive. But that's turned positive this morning. Gold on the 4-hour time frame. Muzzy. And the other one was silver. Silver. Let me have a look. Where's my silver chart on here? It's on here because I saw it this morning, but it's been moved. Where's it gone? Oh, let's just go to the other charts, my commodity charts. Commodities. How are we all? Oh, hello, everyone. Hope you're well. Welcome. I've been talking to myself for a little while, so let me just. We'll just have a look at silver on the 4-hour. Arun will come to you. Hello, everyone. I see all your questions now. Good afternoon. Hello, South Africa. Joshi. Hello. Hope you're well. Wherever you are. Apollo. Hello. Faith. Hello. Nice little orange tag there. Emma, we'll come to Aussie in a minute. Aussie's had a really good run. Let me just finish this for Muzzy was asking about silver on the 4-hour. This is silver daily. Let's have a look at this. Is silver daily. That's a bit tight, isn't it? You see it chopping around. Let's zoom out a wee bit. Sort of chopping sideways. But my eye is immediately drawn to this, the 200-day moving average here, which we've been over for most of April again. So we drifted down into the end of March, and we've been that's been our key support for April. So 2570 is in there for a reason. I don't know why, but it's obviously it's at R2 today. It's from a previous support level here, or a previous resistance here. There we go. You can see why it is. There's that. Can we see that now? You can see that. That's the top of that candle there. It runs through here as support in the middle of March. Obviously, there's another support level under here on the daily time frame through there, that yellow line there at 25 itself. So we're over 25 from earlier in the week. That was what was that, Tuesday? So strong day Tuesday, over the 20-day moving average. But as you can see, the Bollinger Bands are still compressing, and they're still moving down. So we had that pinch point there. We squeezed in, we moved down. Here looks like it might be a squeeze again. See how the Bollinger Bands are coming in? Can't see it yet because they haven't moved out, but a break of 2570 would be positive, certainly on this daily time frame, to break silver up. And then the next resistance would be this high here through March, which would take us to 2625 sort of area. And as you see, the top of the Bollinger Band is coming down to greet that. To get through that, we need to break through the 50-day moving average. So there's some quite resistance there between that before we get to this 2570. So we've got the 50-day moving average at 2560, and then the R2 and the key resistance from before, which was support, I should say, at 2570, and then 2624 on the daily time frame. 4 hours, what you asked about, Muzzy. And again, you can see that playing out, those key areas playing out. So today we're over the pivot point here at 2535. We're over our 200 period moving average here on the 4-hour time frame. So that's the first time we've been over that for a long time, isn't it? That's a very interesting candle this morning. That would have attracted more buyers today as we've gone over that 200 period moving average. Over R1, so we're now sort of struggling. See a big pivot candle, big doji candle, big long wick to the north, big long wick to the south. Lots of indecision about where we're going to go from here, but those daily targets still remain set. 2570 here, R2 for silver. Right, let's get onto it. There's lots of you in here, lots of questions. Right, Emma's asking about Aussie dollar. Aussie dollar has been positive. It's had a positive few days. It's had a positive day today. Not as positive as the Kiwi, but it's certainly had a positive day off 76. And we talked about this earlier before anybody joined me. So Emma, Aussie, Kiwi, Aussie dollar here, 1 hour time frame. Here we are, channeling sideways, Monday, Tuesday, Wednesday. We broke over the 200 hour. We had done there, didn't hold it. This was a key break here, as we said before, late Tuesday afternoon, and then it's just rallied from there all the way up, dipped into the 20 hour moving average, but very strong correlated moving averages, and we're off and running. And R1 sits there at 77.65, which is where we've ran to earlier today and bounced off it. We're having another go at it at the moment, so that remains bid on the 1 hour. Let's have a look. Let's go up the time frames. I don't know what time frame you trade it, Emma, but we continue to rally. This is the 4 hour. You can see 78 is our next level. We were chopping around sideways here within the Bollinger Bands for second half of March, first half of April, and now we've broken out over the 200 period on the 4 hour here. On the it was earlier in the week, wasn't it? Or early in the month. Yeah, the 14th we broke out, and then it's just continued to rally. But the first break was this one here we identified on the 13th. Still confined there within the Bollinger Bands, but then we broke to the top here, and off we've run. And R1 today, 77.65. We've tested, but the next big line in the sand is obviously 78 itself. And 78.03, interesting, is where R2 sits. If we go up to the daily time frame, you can see we've been trending lower, and yesterday was the key breakthrough because we broke over the 20-day move now. So there's downtrend here where we'd been under the 20 period, went back to test 78, then we'd rallied, then we'd moved down 200 odd pips under 76 itself here for 3 days, 2 days, back over it sideways, and then a big break up was yesterday over 77 on close. Big strong candle, a little wick at the top and the bottom. That's always a positive sign. See the small wick up to the top of the bottom of the body, and then we followed through today. So it may be a bit of a cool, but certainly 78 becomes the next real target here for end of day traders for the Aussie dollar. Typical ATR is about 64, 65 pips on a day's move on the Aussie dollar. So up to the upside. Arun, good afternoon. Hope you're well. Hello, my friend. Let's have a look. Run Euro trend, please. Well, the data that's just come out has added to the Euro rally, basically. So we're within a few pips of R1 again at 119.95 this morning, or earlier this afternoon, I should say, not this morning. We moved down to test the 50-hour moving average, which has provided support. Now we moved up on the data, and then we're sort of now stuck at the pivot. US data today, economically, was very positive. The claims were down very significantly. They came in at 576,000. Expectations were 700,000. So big beat for the first half. That's the lowest for the entire pandemic season. 568. Retail sales was a big beat, 9%. A big beat. And the Philly Fed, I didn't actually see the Philly Fed number. Let's have a look. That's likely to have been quite strong as well. Indeed, Philly Fed came in at 50.2 compared to expectations of 42.0 and 51.8 last time. So it was expected to decline, but it beat significantly, and it wasn't that much of a decline from last time, only a couple of percent. So nice, strong Philly Fed, the manufacturing index for the District of Philadelphia, so strong. The only caveat I would add is that the claims data, the 4 weekly average has actually been elevated by 7,000 from last week to 730,000 from 723,000. And the weekly claims that came in at 744,000 last week have been finally revised to 769,000. So 76,009K. So that's the two caveats in the thing, really. Everything else is positive data. The revisions for retail sales were positive the previous month for February, but the March data is very strong, as I say. Retail sales, 9.8%. Big consumer economy, obviously, the United States. Retailer is king, they often say. And so we're off and running. Data's strong. I mean, we're talking about the data releases, my friend. So anything you want me to have a look at, let me know. Yeah, that's one of those questions. And Emma's just nailed that question. I'm sure a lot of you are asking. Why is the USD very weak despite the positive data? Well, the reason for that will be that the recovery might be getting ahead of itself. So it means that the dovishness of the Fed is in place. So they're not really going to change that. So it's strong data, it's good data. It just may jump and get ahead of itself. So although it's the data was positive, the dollar sort of initially on the data, remember they can move around. See where they finished today. Has weakened a bit. So that's to be sort of expected. I know it sounds a bit odd, but that's to be expected because the market is expecting much dovishness from the Fed, and the data is strong and it's stronger than expected. So it could be that it takes the pressure off the Fed being so dovish. So that would expect the dollar to rise in that case, but that isn't how the market's interpreting it currently in the immediate aftermath. So just trade what you see, not necessarily what you think. Don't overthink things, Emma. What we're seeing here is a relatively strong euro dollar, for instance, on the 1 hour. It's cooled in the hours before the data, and now it's trying to settle about where it's going to go from here. So a break over the pivot point would be relatively positive intraday, but the big support is clearly the 50-hour moving average. So if that breaks later today, there's a bit of fresh air down there because it went up quite nicely and it could go down quite nicely as well as it can. Again, big data point here on the 13th here. So this is that big 3 o'clock candle you want to look at when the US data comes out. So see where we finish because we've been oversold. It tried to recover and it's bouncing up. So see where that's going to go from there. Basically, that's how to. Yeah, and don't overanalyze things too much either, Emma. And that goes obviously for every. Good evening, Dad. Stand. Hope you well. Anything you want to have a look at? Let me know. Anything Swiss yen going? Not one we look at a lot. One that doesn't move very much, but both of them safe haven currencies. Oh, I don't know. I've got it here. Let's have a look at the Swiss. Any particular time frame going? Sorry, I'm just looking at. I can't see my Facebook questions here. I'll be back with you in a minute. Right, there's no more questions over on Facebook, so let's just get back to right. So Swiss yen for Guerin. Let's have a look. Swissy. It's here. Swiss yen, it's a white one. Have I got a black one? So let's keep it on the same. Right, so again, another one, they cancel each other out. Clearly, you can see there's a big oscillation going on here, up and down. So clear, a bit widening, if anything. So that's really positive. It's moved down, so it's not really. The blue line here, this is the daily going. It's over the 50-day. It's over the 200-day. The 20-day moved over the 50-day at the beginning of April. We've rallied up to 118.60 at level there, and we've turned down again. In fact, we didn't get that high, did we? That was 118.75. In fact, here from where was this? This is the beginning of March. This is over there. Lots of chopping around. You see the moving averages are flat, so it's not trending. It's not one that I want to really get involved in when we got level moving averages to there. But it's a good example of, I think we said this last week, didn't we? The Bollinger Bands being quite effective. Here you can see how they've widened quite significantly as it's rallied up. Then we've gone sideways. Then we've moved up, and so the Bollinger Bands have widened. Then we've come back down and gone sideways for a week and a bit. So we've narrowed, but the Bollinger Bands are really going sideways here. And then finally in April, they start to open out. You see the top of the Bollinger Band here goes through that high there at 118.78 and move up. We didn't get that high here from beginning of March. Actually, take some of those. Too many vertical lines on that. Leave that one on. Leave that one on 1750. We just looks nice. Let me get rid of those. It's all enough for a reason. As we chopped, they were all as we chopped through the 20. So we went down, we went up, we went up, then we went down, then we went up. So currently positive. We went up, and the 20-day moving average and the 50-day moving average are coming together. So the key support here on the daily time frame, is down here at 117.50 or 117.46, the actual bottom of the Bollinger Band. If you want to be technical, so just below today's S2. So that could either be a support level and we bounce off it again to try and retest this high, or we break through that, break through the 50, and then we continue to move down to this 116.20 area, this low here, through March, our March low there, 116.20, and then that by then the 200-day will have sort of met that area. So 116.20 is a key support area. Let's stick that in now. Next time, so 116 is a key support area for the Swiss against the yen if this area breaks. But first, we've obviously got to break under the 20-day moving average at 117.50. So 117.50, the 50 periods at 117.30. And then lots of fresh air down to 116 for Swiss yen on the daily time frame, my friend. Leo, that's a very good question. We do have all these sessions with my colleagues in different languages, in Arabic, in Urdu, in Malay, in I don't know what language you would like. Lelo, let me know. Alexandra, Alexandra, if you want French, I don't know. You let me know. We'll obviously, we're here to oblige, my friends, basically. Emma's back. Do you think the dollar can retrain its strength anytime soon? Well, let's just have a look. The dollar, the key, if you're talking about the dollar in general, if we look at the dollar index, which is a weighted index of dollar currency pairs, dominated unfortunately by the euro, because in my view, it's got far too much weighting in it. But if we look at the index chart, so the dollar index itself, as we said, it touched a 17-day low today at 91.50, went under that and it bounced from that level. Dollar index, here we go. You can see here we've had a very strong, surprisingly strong January. Many were expecting it to continue to go down. This is the end of 2020. We had a sort of sideways January, sideways February. Then we had a very strong March. Went all the way up here to 93.45. Now we've moved down. If I just put in the, can't see on this chart, I'll put in the period separation. See that? There we are. So a very strong March here as we rallied up through the 200-day. And then we turned around in April, topped out at 93, through 92, and under the 200-day moving average, breaching the 20-day moving average. So that was a key day here as we went under for the first time here on the 6th of April. And we just continue to decline ever since. So here we are, you see today, we've tested S1 under 91.50 and the 50-day moving average. So the moving averages are a bit mixed up here. They're not in alignment. We've got now the 200 crossing from above to below the 20, which is negative. The 200 is coming down and the 50 is coming up. So it would still be out of alignment, but that would be relatively positive. So who knows, basically. But the trend remains very much to the downside for April, Emma, and just see what you see. Dewey's asked 4 hours. Sorry, my friend. Let's just go back to the 4 hour then for you, because you did ask. So what was it? It was a Swissy, wasn't it? So you got the daily support areas, and actually, let's use this white chart for a change. The support areas, we actually use the black one because it's got the lines on the point. So that's the daily big support areas. The 4 hour will be similar. It's probably rolled over already. There we are. So the 4 hour, again, that top out is a bit more clear there on the 4 hour, isn't it there? So that 118.65 rolled over. And again, just using this 20-day, we had a failed break of the 20 period there on the 13th on Tuesday. Back over it, a failed break over it though, and then a bigger break here yesterday afternoon, and then that's tanked from there, hasn't it? So the 118 level is broken. I don't know when you got into this, Gerwin, but that's moving lower, and that's just trending lower. See how, again, the move in the Bollinger Bands is much more exaggerated there. If I zoom that in and try and, there, hopefully you can see that a bit better if I move that backwards there and then zoom that up. There you are. You see the you know how the bird's beak, as we call it, has widened here. See how it's suddenly widened? It pinched in, and then we moved down. We pinched in, moved up, pinched. No, it's not much of a pinch. There's not much of a pinch. Well, there's a pinch there. See how the top came down, bottom came up. Big candle above that level there, and then it rallied up. So you quite often get Bollinger Bands are great. So yeah, that triggered low here into the second half of the under half of the Bollinger Band, and then it's just tranked lower, and that's heading for that support at the 200-hour or the 200 period on the 4-hour going there at just below S2, which is 117.55, and the 200-hour, my EMA 200 hours there. 117.58, so a few pips between that, but that's continuing to trend lower. And just stay with it if you're short on that one, my friend. That's absolutely no problem. Suba, go. Let me just quick check if there's any more questions on Facebook. No, Facebook seems to have gone to sleep for some reason. So a quick refresh. Excuse me. We've seen our Paris Saint-Germain semi-finals of the Champions League. I've got a sneaking suspicion this year. Last year was just a practice. Very poor against Bayern in the final, but Mbappe is a year older and they're playing really, really well. So let's see how that all pans out. And remember, we've got our trading competition, our Road to Paris trading contest. So if you're not part of it, join in. There's still time to join in. There's weekly winners, so do take part. Have a look on the website for our trading competition, the Road to Paris. See the PSG players training, get a seat in the big, fat, comfortable seat in the stadium tour as well available. So where are we? Let's have a look. Vu's asking about dollar week. Yeah, he's right. There's no more questions. What's happened to Facebook today? No more comments on Facebook. Speak to my marketing friends. What's going on today? So no comments on Facebook. So right, let's have a look. Where are we? Yeah, that was Gerwin's Swiss yen 4-hour trending lower. So Sue was asking about gold. Gold has been having quite a good time. What we're going to lose that? Let's use that one. Rejected that 1758 on the break on the daily time frame. Suba. Strong day today. As the yields continue to weaken. There's been a very, very strong correlation between, there always is, but it's been particularly strong now as the 10-year yield in particular. Watch that, the number on the yield for that continuing to sort of cool down. We had a very good uptake of the bond. Well, depends how you want to read it, actually. The 10-year auction this week went at 168%, so it's quite high towards the top end of the range we've been in for a while, above the key psychological 160 and obviously the round 1.5%. But the market's taking the emphasis on, it's been focused on the yield curve and the 10-year yield for a while. It obviously never takes its eye off it completely, but that's been the main sentiment driver. And that's sort of cool now as the yields itself are cooling, which is why the dollar's weakened as well. Sorry, it's not gold, is it? So gold has benefited from that. If we go to the 1 hour, you see the gold has benefited over the last few days. Let me go to the daily time frame. Over the last few days in April. So we broke here, and it's been over it's a week break, but it's been over its 20-day moving average. Suba, all of April, and it's provided key support. So the support on an end of day basis is here at 17:35. Right, somebody send me a Skype message, and they want me to respond straight away, and I can't do it because I'm talking to you guys. Let me just tell one of my colleagues that I'll get back to it when I can. I'm live on air. Get back to you. Finger typing here. That's up. That's all right. Now, both fingers can finish. So, where were we? Yeah. So the 20-day move now is that key support on the gold market. So you want to watch that. That is now today's S1. 117.29, 117.30. So that's the key support. Intraday, it's moving higher. This is the 4 hour, supported by the 50 period moving average here. A big move up this morning. In fact, that was this morning. I've moved down. So that's our daily support down here. We didn't get that low, and then we've moved up so far today. And the 1 hour, also a bit choppy, but also positive. The 1 hour's had the 200 hour as its support there. That's gone long here on this crossing strategy this morning at 8 o'clock. It's been long from the pivot point to the R1 today, but it's been all the way up there and tested 1750 as well. So gold remains sort of bid to the upside, Suba, there on that 1 hour time frame. Good morning, Ebony. How are you? Hope you're well. Pound Oz, where are you? Still long this, or are you? Where are you with this pair? Pound Oz. I've got that set up. So pound Oz. My next question is very funny. Okay, Al-Fayed. Al-Fayed, I'll come to you in a minute, but think about what you've just asked, okay? And I'll come to you in a minute. So, Ebony, pound Aussie. That's unwound. We've got a weaker sterling this week. Let's zoom that up. So we had been tracking higher. Earlier in the month, we'd broken over the 20-day moving average. Well, let's have a look. We'd been tracking higher. Then we went under the 200-day moving average. Then we went under the 20-day moving average here on the 8th. That's my key indicator. But we're out of alignment. So we've got the 20-day there. We've got the 200-day up there. We've got the 50-day down here. And we've got the 20-day in between. So they're not aligned, are they? If you've got a trend, you want them in alignment. You want the 250 and then the 20. Or the 20, 50, 200. Whether we're going up or going down. As you can see, what's happened is basically that we've run out of steam because we've been going sideways. So it's a non-sort of trending market. The big break was that one I've just identified there on that day there on the 8th when we went through both the 50-day and the 200-day moving average on the same day. Big candle, not as big as obviously the first break under the 200, but a big candle, sideways and against us. It might have in fact stopped you out, but really if you've gone short there, your stop loss really should have been above the top of that candle there. So your stop loss is there. You've gone short here under there. There. It's retraced a couple of days, but then you're very much in the money now and it's off and running. I don't know what these Fibonacci levels are. They're from previous moves. So I don't know if they're still relevant there. It's that one. And it's retraced. It's a bit out of sync now. So let's just take those off. They're sort of messing things. Remember, guys, these support and resistance areas, Fibonacci levels, they're all there to be broken, basically. They don't last forever. They can be, key round numbers are key, 1,800 or 1,600 or whatever it is, but they don't last forever and they can break. So pound Aussie ran out of steam at 118.62, 60 is really that 3-day high there, but that was your first heads up, certainly. System would have triggered short here on the 8th, and it's still short. Stop loss was probably just above the just above the 200-day, 20-day now, given that that big candle's happened. But I'd be still happy to have it at the 200-day from that one up there. So that's a stop loss up there. That's your entry. You haven't yet got the ATR. What's that distance? That takes you to what's that? About 200 and odd pips. So now far, still not got to that quite yet, but that's still short just from a risk reward ratio, but that's still moving down. The moving averages have moved out. Where could we go? Well, you need to look left. Where's the next support? The support is there. So 117.75. So you might, if we break that, or that might be your first target. ATR on this one, if you want to use the ATR, has been 117. So you've certainly got that already from the entry here on the 8th. 100, and that was on, not yesterday. Yesterday would have got you to your first ATR target. Key support is just below S1 at that 117.73. So that's still short and going down, Ebony. I don't know what time frame you're interested in. Does yield down make dollar weak too? Yes. Yes. So a weaker yield tends to correspond to a weaker dollar. Stronger yields tend to correspond to a stronger dollar. These are just big broad statements. There's obviously, so remember, always with any trend or any cycle, there's cycles within the cycle. So, but in general terms, yes, because remember the yield is inversely correlated to the price of the treasury. So as the treasury price goes up, the 10-year, the 30-year, the 5-year, the 2-year, whatever it is, the yield on those things has to go down as the price goes up. As the demand for that treasury goes down and the price falls, the yield has to go up to encourage people to buy it, basically. So that's the inverted correlation between the yield on a treasury, a government bond, and the price of the actual bond itself. Remember, they're very safe investments. They're low, therefore low yielding, low risky type of investments, because governments, particularly the US government, tends not to go bust, but governments do go bust. So nothing's completely risk-free. Obviously, let me just go to this question that came in before, and I don't know if some of you want to answer it for him. Fayad has asked, Razak here is, I'm looking for a trade to make money. Any advice? One, Razak, I can't give you advice. I'm not allowed to give you advice. But you just shouldn't go looking for a trade. You should have a system. You should have a system. You should have an approach that the system, the trades trigger that trigger your system or your strategy, your approach. If you're just going to dive into the markets and trade here and there and thinking this has gone up too high, so it's going to go down, or it's gone too low and it's got to go up, that's when the market will, very, very brutally take money off you. So be very, very careful about how you're trading. It's your money. Respect it and look after it. Okay. So, as I say, unfortunately, Razak, I can't give you any advice. I'm not allowed to tell you where to buy and sell, but I can show you strategies, and over time, they're quite effective. And it's not the strategies. It's not listening to guys like me or watching YouTube videos or following an EA or something. It's all about you trading. It's all about understanding yourself and understanding that it's a risk management business, this business, and you've got to treat it accordingly. Okay, Razak? Okay, I'm getting off my soapbox now. It's one of my big pet things. So there we go. Stuart, we said about the weak yield. Thank you. How are you? I'm very well, Ebony. Thank you. I hope you're well as well. And you are in the Caribbean, aren't you? So Sufri, Mount Sufri, that awful lot of ash getting chucked about. So I hope you're safe, your family are safe, and anybody you know is safe as well, because it's I've never been caught in a volcanic explosion, but that black ash looks absolutely awful. So stay safe, my friend. It's no problem. Hussein is asking about crypto. Well, yeah, cryptos. We haven't touched cryptos yet, have we? Massive day yesterday. Coinbase, one of the big US crypto exchanges, went public. Their shares shot up. They weren't listed like normal IPOs by investment banks, so they went direct to the public. There was a talk of a price of around $250. They actually opened for trading yesterday at $349 for $48. It rallied as high as $420. I wrote it down here. $429 at one point yesterday. Went all the way down subsequently to $310. So still well above the $250. Many people were expecting the sort of ballpark talk figure, but it actually opened at, I say, $498. And closed the day at $328. So, long-term investment perhaps, but certainly Coinbase, strong start yesterday, 15 minutes, and the market will open and see how it does today. But a very strong start for Coinbase, and billionaires of the two founders that founded the company back in 2012 in a little apartment in, I think it was in New York, wasn't it? But anyway, there we go. Story of capitalism at its bleeding best. So cryptos, well, the only one I really follow on a daily basis is Bitcoin. Bitcoin new all-time highs again yesterday at 64,000 and 65,000 on some exchange, or within a few dollars of 65,000 yesterday. Crypto remains bid. The key levels we were looking at on the end of day basis was the 59,000 and the 60,000 here. If we zoom this up, this channel here. You see this channel we were sort of hanging around this. 58 was a bit of a support. We went all the way down here at 53,500 as we slid sideways in April. But big breakout earlier in the week over the 60,000 level. Very, very strong day on Tuesday ahead of the Coinbase announcement, anticipation, all the rest of it. We actually ended down yesterday, and we're currently trading at over 60. I haven't got that 64,000. We're currently trading at where are we? A massive. Where are we? What we're trading at? We're trading at 62,745. So cryptos remain very volatile, but they trend and they trade just like any other asset. Lots of people talking about going digital. Obviously, we've had all the stories this year. Companies like Tesla and PayPal and others, BlackRock, we're talking about accepting it as their funds. So positive spin fundamentally in news flow regarding the cryptos. Obviously, the main sticking point remains the regulators, remains this idea of it's a very easy way for organized crime to launder money as well as all that about it due to its anonymity. But the believers are still driving it higher, and there we go. It's trending, and I'm a trend following trader, so there we go. That's on and up. Highs are getting higher, lows are getting higher. The trend keeps going. So there we go. Bitcoin on the up. Good morning. Good morning, Jamaica. What are the indicators you're using on your chart at the moment? Right. Let's just answer that question. So if I zoom this up, right. So what you can see here on the charts here, I can't see your name there. Natural key. Okay. The green lines here are the Bollinger Bands. That's a standard default setting for 2 and 20. So standard deviation of 2 and the count back is 20. That's the green lines. The blue line is a 5-period exponential moving average. So 5-period EMA, the blue line. And the yellow line is the 9-period EMA. So this is a trend following strategy where we're looking for the price to move either above or below those 3 key moving averages, because the middle line here of the Bollinger Band is a 20-period moving average. So we're looking for a cross in the moving averages and for the price to be above or below all 3 of them to either take a long position or a short position. That's it in a nutshell, basically. Natural key. Any more? Watch the webinars on how to trade with those particular strategies. It's all on there. Abrajay, what currency pair is on your screen, please? All right, okay. What I tend to look at, if I just tile that, I have about 12 or 15 charts that normally defaulted on my screen at any point in time. So the most important, well, not the most important one, but in order of volume, order of liquidity here is the euro against the dollar, dollar against the yen, pound against the dollar, and the Aussie against the dollar. Then we got the New Zealand because it's very closely correlated to the Aussie, Canadian dollar because it's very obviously geographically it's a key neighbor of America. Geographically, it's a more very closely correlated to the oil market. More volume goes through the Canadian dollar than perhaps the Kiwi, certainly. Then we got the Swiss franc. Swiss franc is very, very key. It's a safe haven currency like the yen, so dollar against the Swiss franc. On this particular chart, then we got Bitcoin. Below your question, that's gold here, so I'll look at those. The oil, the dollar index, the USA 500, and then a few of the crosses. So I've got the pound yen, the Aussie yen, euro yen, the Nasdaq, the USA 100, the DAX, the JER 30, nice trader, intraday trader as well, moves around quite a lot, nice one to trade. The USA 30, the Dow Jones, and the euro pound. So that's what's that? 12, isn't it? 1, 2, 3, 4, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19, yeah, so that. Whatever. I mean, you can't watch all those on a screen like that, obviously, but that's really there. That gives you the feel for the market, Aberjo. Okay. Where do we get to? Turning from all right. Sorry, we did that one. Sorry. And what's pairs on your screen? That's the last question. So we've run out of questions. Let's go back to Facebook. Vu saying, right, Sabelle was asking about, right, in South Africa, good afternoon. Not sure if you had touched on Nasdaq. Right, so no goes Ngongo asking about Nasdaq, and Cibolo's asking about the rand. I haven't looked at the rand for a while, guys, but it should be down here somewhere. Perhaps it isn't. Let's have a look at the Nasdaq, because it's actually here. So the Nasdaq, or the USA 100, and Billy. Is where we go. So let's start with the daily time frame on Nasdaq. So it remains bid from the bit of the weakness we had in February, and the low we had in March when we went down to 12,300. Let me see your question. I can't see you there. Broke that 12,800 low. That became support in the second half of March. Couldn't decide if we were going to break up, so we were oscillating between this 12,800 level and the 50-day moving average there around 13,200. So there was a 400 pip or 400 point gap on the Nasdaq as we oscillated during March. Beginning of April, we've broken out of that. See how that significant breakout there right on the 1st of April. Opened the day below the 50-day moving average, closed the day significantly above the 50-day moving average, and let me zoom this in, and above the previous highs as well, the intraday high. So that was a very significant day there. So end of the quarter, we closed out here. We started the new quarter, the new month here on the 1st, very strongly, and we've just rallied ever since. Okay, so this system was short here, here from the 22nd of February. It rallied, moved down to that support at 12.3. Then it tried to go long here, as you can see. Very weak break of the 20-day moving average there. It ran into the 50, so it did, and then it did this oscillation from the rally here for a 5-day rally here. Looked like it was going to break the 50-day. It didn't at around about 14,000. Then it oscillated for the second 2 weeks of March, broke out here on April, and we've just rallied ever since. So new highs here over 14,000. We went to 14,100 earlier in the week as well. Intraday highs was there at 14,035. So that remains bid here, certainly on the daily time frame. From this sort of, well, again, you could technically it went long there on this chart there. You could have, that would have been a tentative ad, but you didn't know it was going to break up. But that's certainly a strong entry there as we've broken above previous resistance over the 50-day moving average. So 13,333 would have been your safe entry here as a trend follower, and it's moved very significantly, 500, 600, 640 points to the upside. So it remains bid. Who's asking about that? I've lost your name now. Where have you gone? And Billy, it was in Billy. So that just remains bid. Supported, if you use this entry to get in here, your support and your stop loss now is round about this sort of level S1, or you can still have it sort of bound round there. We seem to have topped out. So S1 and the 9-period EMA, which is another way of getting out, 13,745 would be your stop loss as this is continuing to rally to the upside. And finally, Rand from Mbuthi. Let's have a look at the dollar rand. Again, you'd expect the emerging market currencies haven't. Actually, let's go to the. Well, I've got them all set up. Where's the rand? There it is. Haven't recovered perhaps as strongly as you might expect. There's that XRP. Let's get rid of Ripple. Window. Let's try them all. So the ones I watch on a sort of daily basis, the peso, the Mexican peso, the Chinese yuan, obviously the rand, the Turkish lira, and the Russian ruble. A lot of action on the ruble yesterday over political agreements or disagreements between the Russians and the Americans. Just a saber rattling from President Putin. But rand is what we're after, aren't we? So let's have a look at the rand. So rand continuing to sort of move down. So nice, wave action there on the rand. Below this key level here at 13,400, under 14,500. Sorry, 14,400 today. So again, the trend remains to the downside. So we've big move down here for the dollar, for the rand appreciating into this low. We rallied off it over 15 to 15.6, 200-day moving average was way up there at that point. Here we're coming down to it. Down again, bounced off it, up again, but again, interestingly, the highs were sort of double top here, and then we've moved down, a bit of a retrace, and then down again. So we're below this key level from February and January, this 14.4, and a big down day today as well. So obviously the question is, where do we go from here? So sideways action, but we're breaking out the bottom. So it's only a day so far, but we're moving down. Where do we go from here? So if we zoom this in on the daily basis, you can see we're into sort of fresh air, all the way back here. Takes us back to March last year. So we're at well over a year low. So what does the weekly tell us? So the weekly chart, let's zoom this up because it's too tight, isn't it? So the weekly chart, and you can see this week today. So it's a key break so far this week. Obviously, it's still got tomorrow, but it's still looking very weak because we've broken this line here, and this is the 200 period moving average on the weekly chart. We're actually under it. So we look to the left. When did we last break that on the weekly time frame? We haven't been under the 200-day moving average all the way back there to the end of January 2019. Okay, so it's over a 2-year low. But as you can see, the last time we did it on the weekly chart, it was 1, 2, 3, 4, 5, 6 week move down, consecutive 6 week move down, and then it recovered from it. So is it going to happen this time? Who knows? Just because it did last time doesn't mean it's going to do it next time. But the trend is certainly weak, and we're actually, from a price point of view, not as low as that level. So we're still through here. So we're back into this. I think we've done this before, haven't we? Back into this congestion level that took out most of 2019, where we were pivoting through support at 14 and resistance at 14,500 for the rand. Let me just take that off. I'll come to gold in a minute. This is dollar rand, my friends. Let's put back on there. So this is dollar rand, everybody. So yeah, weekly candle at the moment. Again, end of week traders will have a look at that over the weekend and say, So again, another one that's trending lower. Next support is 14 itself, obviously that big psychological level. But we are under the 200 period moving average on the end of week basis. Daily, obviously, it will remain to the downside. And the monthly, again, you can see that level, which took us to 14 here at the beginning of 2020. But the weekly candle took us back to the beginning of 2019. So some key levels here for dollar rand, and that downtrend from that 19, that panic for the rand at this time last year as the pandemic was gripping. As dollar rallied, EM currencies got whacked. They've recovered for the rest of the year, basically. That was the turnaround there was May last year. This is March and April last year, when we're all the way up to 19. Here we are a year later, testing 14 again. So pressure to the downside still. Let's have a look. We got any more on the rand? Okay, so all right, I've got 2 more questions. So 2 more questions, and then we'll wrap it up because I've been here an hour now. Okay, another question on gold. I think you mean by that, don't you? So gold, as we said earlier, where's gold gone? It's not on here because I'm looking at the wrong chart. Gold has been supported all April, dull, by the 20 period moving average. You can see that support, and that's at S1 today, as I said earlier, at 1729. So that's your key support area, 1729, just below 1730. A resistance here is the 50-day moving average there at, it's not at 60, that's the at 1757. So 1729 is key support. Below, where the 200-day moving average is, and the 50-day moving average there at 1757. So key range there. Intraday, it's been quite bullish. So 4-hour is a bias to the upside. We're over 1750 at the moment on the actual cash price at the moment. And again, the 50 period has provided support there on the 4-hour this week. Haven't had that big move up from the 1725 low we had at the beginning of, when was that? That was 13th. That was earlier in the week, into 1725, and it's moved up. So that's been bullish from that support of the 50 period moving average. And the 1-hour moving average, the 1-hour chart, again, that big, that's the extended support we saw at the 50-hour on the 4-hour time frame. It's the 1-hour time frame there. The 200 period sits right on there. That's 1735. And again, that's been bullish since, when was that? This morning at 8 o'clock. It's rallied through the pivot point, rallied through the 50-hour moving average over R1, and we're currently out and above yesterday's high, which we couldn't break and hold at 1749 at 1751. So we're over the psychological 1750 at the moment and moving up. So that's suggesting a weaker dollar at the moment as well. Okay, so as we just open for trading in the United States. Create a live account with $30 with HL after applying all analysis yet. Currently loss of $21. Any advice, please? Actually, I can't give you advice. I'm not allowed to. But just remember, it's a small capital account when you've only got that amount in your account. So be very, very careful when you're trading that amount. If you're not comfortable trading live, as you say, go back to the demo. I tested demo with a different account, try my analysis, and they all yield fine. But now with live account, I'm losing. Can you help with these points that I have? That's a very, very common mistake. It's nothing to do with you in a sense, Abojo. That's a lot of what happens with traders when they start trading with real money. It's got nothing to do with you. It's all to do with our subconscious and our psychology. So obviously it has a lot to do with you, but it's you. It's nothing you particular are doing anything wrong. It's your subconscious, because you're trading with live money. Your mind will be acting differently. It's just the way it happens. You want a bit more experience. If you're not comfortable, go back to your demo account and just see what you were doing right. See if you're doing anything different with your live account, your real money, than you were with your demo account. See if you're thinking about things differently. Write stuff down. Write all your trades down and analyze everything that you're doing. Okay. See why you got in, why you got out, what approach you're taking, and what markets you're trading. Is it different from your demo account to your live account? If all those questions are still the same, then it comes down to your subconscious and how you're dealing with your trading with live money. So are you a bit more nervous because it's live money? It is, if you lose all of that, that very small account, is that going to affect you? Is it going to impact you at all? If it is, you shouldn't really be trading with it. Stop. Go back to demo, save up, put a bit more in if you can, and open an account with a bit more capital, because that's a very, very small amount. Okay, but normally this is quite a normal procedure in a trader's sort of life cycle to be quite confident and comfortable with a demo account, and then have problems when they go live. And it's not necessarily you're doing anything different. It's just the fact that subconsciously your brain knows you're dealing with real money rather than paper money or a paper account or a demo account. Okay, so bear that in mind as well. Make sure you understand everything about margin, leverage, and the spread of the assets you're trading as well. Okay, so that's all for now. Thanks for your time, everyone. We'll see you again next time. And let's get rid of that. Get rid of me. There we go. Get rid of me. And